All right. Good morning and welcome everyone to Fobi's Q2 financial results webinar covering the period ended December 31st, 2022. I'm Ian Cameron, Vice President of Marketing for Fobi, coming live to you today from Tokyo, Japan, and I will be your host. We are also joined today by our CFO, Annie Chan, our new CRO, Colby McKenzie, and as always, our CEO, Rob Anson. We'll start with a presentation from Annie, followed by remarks from Colby to go into a little bit more depth around the strategy around revenue, and then final remarks from Rob. And we'll end with Q&A. All right, well, let's jump right in. Annie, we'll turn it over to you to go through our slides.
Thanks, Ian. Welcome to Fobi's financial update, and thank you for calling in. In last quarter's update, we presented you with this timeline to summarize what we've accomplished and where we're headed. As a refresher, 2020 was spent on R&D activities. In 2021, we started acquiring companies. The two substantial acquisitions include Passfreighter, a European digital wallet company, and Qpulse, a coupon management platform. We spent part of 2021 and 2022 integrating our newly acquired assets so that we could commercialize and monetize. We achieved commercialization in fiscal 2022 and have since focused on growing recurring revenue. Next slide, please, Ian. Some of the key takeaways from last quarter was that we need to focus on generating recurring revenue, improve cash efficiencies, and strategic acquisitions to complement our suite of products. We have kept our words, and we have made good progress on each item, which I will elaborate over the next few slides. Total revenue for the 3 months ended December 2022 was $501,000. While total revenue decreased compared to the same period last year, a major difference is that the $501,000 earned this quarter is mostly recurring, which was not the case in the comparative year. We made the decision to take 2 steps back to move 3 steps forward by focusing on building scalable and repeatable business models. And although we sacrificed one-time revenue, the shift in focus in recurring revenue is the responsible thing to do and is proving to be very successful. Next slide, please, Ian. And since we shifted our focus to scalable and repeatable business model, we have seen a lift in recurring revenue. In Q1, approximately 75% of revenue is recurring. In Q2, approximately 85% of revenue is recurring, and therefore establishing $500,000 revenue per quarter to become our new baseline revenue. In addition to seeing a large percentage of revenue move towards recurring, the company has also benefited from enterprise license renewals. Our enterprise clients are renewing, and with each renewal, the total contract value increases. Our clients are committing to higher usage, and they're asking for more functionalities. And not only does adding more functionalities increase the stickiness to a product, but it also increases the average return per user. And the fact that we're seeing renewals with increase in total contract value, it further validates our land and expand strategy. And we're seeing the fruits of our labor from past pilot programs. We are also seeing increase in customer count, both organically and through channel partners. Next slide, please, Ian. We have also been successful in reducing our OPEX burn. OPEX net of non-cash items, namely amortization and stock-based compensation, is $2 million for the 3 months ended December 2022, a $964,000 decrease compared to the same period last year. The decrease is mostly due to the 3 line items listed. Salaries is 40% less than the same period last year. Consulting is 18% less than the same period last year. Previously, the company had a large team of engineers. We needed the expertise to integrate the assets acquired. And since integration is now largely complete, we are able to scale back on headcount. We have also moved some resources offshore where the talent pool is larger, the skill sets are higher, yet the cost is significantly lower. Technology expense is 25% less than the same period last year. Last year's higher balance is due to costs incurred to architect our platform, integrating with our newly acquired subsidiaries. The amount is reduced as the company transitions from an R&D stage to commercialization. The resources we invested in building and acquiring our tech stack is paying off. We are well positioned to monetize what we've built through existing client relationships and new partnerships. And as you may recall from recent announcements, we signed multiple contracts in January and February, including 2 Pulse Iron contracts valued at $240,000, where the revenue will be recognized in future quarters. We also announced we entered into a share purchase agreement with Passworks. Passwords is a digital wallet and mobile marketing company, and it generates a meaningful amount of revenue. Upon a transaction closing, the company will gain further revenue through its acquisition of Passwords. As you can see, the future is very bright, and we have lots of outlets to grow revenue. We also added a new Chief Revenue Officer, Fobi, who will help with our expansion and growth strategies. Fobi will play a critical role in driving our revenue, and I will hand it over to him to introduce himself.
Thanks, Annie. I'm excited to be joining this incredible company and to be here with you all today. A little background on the arrival of the new guy, so to speak. I've known Rob for years, dating all the way back to the early days of Fobi when it was still a private company, and have tracked the company's development over the years. Recently, I was catching up with Rob, as we've done from time to time for many years now. And as somebody that has spent the last 6.5 years in retail and ad tech, including scaling and successfully exiting a venture-backed startup that I founded in this space, I was absolutely impressed with the results of the company's recent R&D focus. One thing led to another, and here I am today joining you as Fobi's CRO. I think Fobi has built some truly amazing solutions for a mobile-first society as we see a convergence between the physical and digital worlds. And I think those are words you'll hear us say over and over because this is something that's very important and very true. You must be mobile first, and we have to stay ahead of that convergence between, again, the physical and digital worlds. There's a lot of work ahead, but as Annie mentioned, we are really well positioned for growth. I've spent my career implementing monetization and growth strategies, both organic and inorganic, for emerging companies, and look forward to rolling up my sleeves here and getting started in advancing our monetization strategy. With the development of our tech stack in hand, our near-term monetization strategy will be focused on 3 components, and I'll walk you through those today. First, we're going to focus on growing our base, the expansion of our 3 prior acquisitions. We'll continue to lean into these established businesses to drive additional revenue. The focus will be on adding to our enterprise client base and increasing total contract value of our current customers through the land and expand strategy mentioned by Annie. Second is going to be new vertical growth. We have a few impressive case studies under our belt and look to have our inside sales team focus on a few core industry verticals to grow customer count in the places where we believe that we have a compelling offering. And third, and definitely a last but not least here, the biggest revenue accelerant is we're really going to continue to work diligently on our inorganic growth strategy, onboarding and monetizing strong channel and white label partners, structuring joint ventures and strategic verticals where we believe that the addition of equity-based domain experts will provide the best path forward, and of course, a continued focus on accretive tack-on and tuck-in acquisitions across the globe. Each of these components will play a role in the revenue growth of the company for both 2023 and beyond. With that, I'll kick it back to Ian to hand things over to our CEO, Rob Anson, to provide you guys with some additional company insights.
Thanks, Colby. Rob, why don't you finish up with the comments?
Perfect. Thank you everyone for joining today. For us, it's always interesting to me when I look at yourselves and we're taught every day not to look in the rearview mirror. But for us, I think it's always important to learn and to grow. And I think we've made some pretty large strides in moving forward off quarter to quarter now. I'm very excited about the quarter ahead. Obviously with Colby joining our team, not only gives me a bit more time back to focus on the capital markets and strategy side of the business, but I'm very, very excited for the pipeline that is in front of us that Colby is inheriting. We've been working diligently here over the last 6 months on a lot of what's about to come. And this is where a lot of my great confidence comes from. Annie's done a tremendous job of restructuring the company from a cost perspective, ensuring that everything is in order and in line with where we are. And I think that's a very bright future and very, very excited about the remainder of the year. We've had to make a lot of very hard decisions. I've had to unfortunately let a lot of great people go. And really, you have to be, as Annie said, I've always preached that you have to be willing to take a step backwards to move forwards. A lot of what we do is on a roadmap and a strategy, which I've built here over the last few years. We've pivoted, made some great agile turns, developed some new technology, and as Annie said, now commercialized. And this is sort of where the rubber meets the pavement. This is where the fun happens, and where you see some of the excitement of the team and now the momentum that you all are witnessing, and some of the releases that we have shared. There's obviously a lot goes on. No, we do not announce every deal for a few of the questions this morning, but we do have a very, very, very focused strategy. And with my time now, being enabled to be more permitted and focused on that capital markets and M&A and all these great things that I love doing, it's obviously going to benefit the bottom line and the results here moving forward.
That's great, Rob. Thanks for those comments. Colby, Annie, thank you for all of that. We're going to jump into the Q&A now. So I'd like to start off. Interesting question for Rob. First question is, can someone explain to me how in the previous day's trading session, the last trade was at 55 cents, then why, with 1 hour ahead of market opening, someone would post 180,000 share offer at 40 cents?
That's a great question. I woke up to that this morning here on the West Coast and looking at a 32% offering on a market order on an iceberg. I think it's very clear why it was done. There's no surprises, as we all know, that certain activities that certain groups are doing that I can't say too much as to what's happening in the back here, but they're losing, put it that way. And these are just desperate measures and attempts, that are being monitored and watched. And hopefully there is something that is done about it. But if there isn't, as I said, we are very focused as to what I'm doing. I love chess and I love poker. So this is, if it's not going to be done through the regulators, I'll force the hand in market. And this is why I'm very confident as to where the company is going and what's going to be done. And like I said, I can only focus on building the business. And as we see here today, where we've got tremendous buy support in the market, we've got tremendous shareholder support, we've got a tremendous amount of eyeballs on us, we've got a lot of institutions that are reaching out on a daily basis that are excited for us to climb back to the dollar mark so they can participate once again. So I'm not worried about these attempts that come up time to time in order to suppress or spoof or scare the market. They simply don't work, and they will not work. And we will continue to roll and grow and ultimately run through it.
Good stuff. Here's another hardball question for you, Rob. Looking at the P&L, it appears that the company is going to run out of money in 2023. The positive is that the company appears to be gaining momentum again. So why don't you just do a large raise and fund the company from that?
Well, that's an interesting one. No, I mean, you got to understand something, that we're looking back at a 3-month period here. So this is not where the company sits today. This does not include a lot of the revenue contracts, of course, from this quarter and renewals and other contracts we have signed. Does not include all of the different option exercises, monies received and whatnot. So it's not a true representation. So no, the company is not going to run out of money. I have great confidence in the growth here as we move towards cash flow positive. And I know some people might laugh at that, as looking at a few of my emails this morning, looking at the numbers here today, but that is our trajectory in our path of what's to come in coming quarters. And it is something why I do have great confidence in where we will be at end of year, and especially end of calendar year. What was the second one? Why don't I just raise money now? I've been more than happy. I think part of this, as I said, going back to the other question, a lot of this for me is strategy. We have incredible tech partners, incredible strategic partners, incredible investors that are wanting to become part of a bigger solution, wanting to have skin in the game as we grow together. I've had great offers, many seven-figure deals through other tech partners that I don't need the money, in all honesty. And I'm happy to bootstrap and continue to do so. I don't see the value in doing a large raise at this given time, and especially down here at these numbers. I personally believe, and obviously this isn't financial advice, but I personally believe we're completely undervalued. And I think next quarter, we look back and have a bit of a chuckle as to where we were, and a high five as to the strides that we've made. So no, I'm more than happy to continue to bootstrap and move forward on that basis. You know, I've worked on this for many, many years now to get to this position. And as I said, this is very strategic as to why we've taken these smaller amounts. And, you know, I'm not going to be going back to the street. We're going to see organic funding. And if there is a time for acquisition or some of these other things, then I have strategic money that I can go to. So I'll leave it at that.
It's a great answer, Rob. Thanks. One last question for you, Rob, before we get a couple for Annie. This question is that you guys went dark from the end of November and carried through the month of December. This surprised and concerned a lot of shareholders. What was the reason for this?
Well, it's part of the strategy here. You know, we've had, I would say, well, we must, because I get grilled on this some days, that too much news. You guys have too much going on. And really for us, I think, you know, we try to provide as much transparency on a lot of these things as we can, understanding, of course, that we're not always able to announce who these customers are because of confidentiality clauses. But I think it's important for the shareholders to understand the sort of traction and momentum and focus of where the company's at. So news flow has been something that, you know, is always sort of front mind for myself. And as I said, and, you know, Annie reiterated, you have to be willing to take a step backwards to go forwards. So I looked at it, you know, tax law season was, of course, upon us. You know, we were still at that time in volatile markets. And you just got to sometimes let it fall where it may. And once you find that new bottom and consolidation, you build that base and you rebuild in a new year. And, you know, we were head down in the background, working away on what was about to come for this year. And as I said, you know, why I'm so happy Colby's here is I was wearing multiple hats, and it's, you know, I have no problem with that. I've done that since day one. But to really recognize the true potential and value, I needed to have someone as talented as Colby come in here. The value that he brings is absolutely exponential. And it's something that obviously I'm very appreciative for. His confidence and faith in our team here, and he's a tremendous asset that will bring great value to our company. As we see where we came out of our quiet period, now I think we start to get the joke here, as they say, that commercial launch of Pulse IR. Now we see that multiple contracts signed. You know, these builds to the revenues in the story. You know, the exciting part to me, we see, you know, it's easy to, I don't want to say it's easy to sell something, but it is easier to sell something once. You know, when you go through a year license with some of these enterprise clients, of which we have, the big excitement comes from the renewal. And then as we experience these renewals now, we're seeing expansion. And that's the biggest compliment to our team. Not only is it the credibility and viability of the product, but it's the level of service that we provide to these companies. So that's something that can be understated here. We've got great channel being built on the Qpulse front. We've got some great momentum now, and excitement around 8112 for Eddie and team down there, and past creators getting record inbound leads. I think first 2 months, we outsurpassed all of last year. So market readiness plays a huge part in these emerging new technologies. And there couldn't be any, I haven't come across any more relevant tech stack than ours. Big data, artificial intelligence, digital wallet, and credential. All the SEO and Google ads that are out there today, that is all the biggest search engine hits. And we're right there front and center. And that's why the fun now is we're getting all these great opportunities on inbound, not us having to chase this. So it speaks to a lot of what we've done. And as I said, why I'm so confident in where we're headed here for next quarter and remainder of the year.
All right. Thanks, Rob. Next question is for Annie. So nice comment from one of the investors. Nice job of cutting down on the operational expenses, which obviously prolongs the company's run rate. My question is, with the federal government having such a big focus and agenda around digital credentials, coupled with Fobi now having commercialized and leading edge technology, are there not government grants that would be available to Fobi, and has the company looked into SHRED?
Thanks, Ian. Well, thanks. First of all, thanks for acknowledging that we have been successful in cutting down our OpEx. Fobi has found and has been successful with various tax credits in the past. With respect to SRED, which by way of background stands for Scientific Research and Experimental Development, which as the name implies is a tax incentive to encourage companies to conduct R&D activities. This tax incentive is geared more towards private company, CCPC, which is Canadian Controlled Private Company, because the tax credit is refundable to private companies, but not to public companies. In the case of Fobi, because we're public, the amount is not refundable, but we could use it to grind down any taxes owing from our profit. So this is a tax that we can better utilize when we become profitable. Alternatively, there might be opportunities to for us to restructure to gain a CCPC entity. So it's really a matter of whichever comes first. You know, we might become profitable first, or we might restructure before we proceed with the filing.
Thanks for that, Annie. Next question is for Rob. It's a kind of a two-part question around 8112. So there seems to be more frequent industry updates and a lot more buzz and anticipation around the anticipated launch of 8112, the new digital standard coupons. Can you give us a general update on 8112, and is 8112 only for grocery?
Yeah, that's a great question. No, I'll start the last one. No, it is not specific to grocery. This is a digital standard that is vertically agnostic, obviously with Brandy's background and the affiliates of which she works with. They've been heavily focused on grocery and convenience industries. But no, this is something that is supported through point of sale providers that span across a multitude of different verticals, as I said, vertically agnostic. So I can't speak too much to what Brandy and the TCB team are doing, but I do know that there's many conversations going on a global level, not just stuck here in North America. And there's multiple different verticals that are very interested in playing here outside of grocery. So the first part of it, some of this, what was it, Ian? Industry updates or something?
Yeah, just can you give a general update on 8112?
Yeah, as I said, for us, we see this as a tremendous opportunity. The CPG brand manufacturers are obviously in the same boat, pushing to see this, wanting to see this live as soon as possible because it solves their pain points. Ultimately, it's the reconciliation and, of course, the access to the data. We are positioned today as the only company that provides access and measurement for 8112 right across all mobile app, clip and print, and digital wallet. We see this is a game changer that literally will double the Qples business overnight, I believe, quite confidently. And where we look at is an industry, just like our technology. There, you can't control the rate of which it's adopted, I guess you could say, and marquee readiness comes on board, and it comes very quickly once that happens. And understanding who has supported the integration so far, this is something that when it does go live here, outside of some of these, of course, there's many different pilot projects that have been run, and it is now live in some locations, of course, but it's really about the big box. Once the big box stores come online, then it's full game. And that's where things get a lot of fun here. And Eddie and team have done a tremendous job of being very well positioned. And obviously the licensing deals that we've done to support that for the largest players in the space show the value and obviously generate great revenues for us as well.
Absolutely. Good answer, Rob. I might just add one last little piece to the grocery question. One of the other sort of really exciting things about 8112 is obviously it's great for fighting fraud because all of the the coupons are serialized, which means that a lot of the brands who manufacture those higher ticket items, the higher priced items, are really looking at these coupons now as as being able to derive their business with that as well. So I think that's where we'll also see some of that growth outside of grocery.
Yes, for sure.
Yeah. Another question for you, Rob, this one around Passworks. It appears that Passworks has some big name clients. Can you give us a better understanding of the logic behind this acquisition?
Yeah, they have some big name clients. I'm not really in a position to speak to that. Obviously, there'll be upcoming news around some of these different projects and opportunities and whatnot that we will share in near time here. The logic behind it, yes, these are emerging industries. I think, when we look back at these, where we've already seen the growth in a very short time in a past creator, as I said, with the inbound leads that are coming in, this is absolutely ripe for the picking. And this is the matrix moment once again. The world has gone digital and mobile, and we're, obviously one of the leading companies in that space. And from the expansion and development and products that are about to come on board here through Passworks, very exciting and value of what it brings to us. Not only is it generating significant revenue, but I'm very, very interested in some of Francisco's strategies from a product development standpoint, because it's very, very, very well aligned with ours and a lot of the stuff that we've been working on the side. So when we saw that, we pushed through this, and it took a great deal of time. Obviously, with the exchange as well plays a big part of these approval processes and whatnot. But very, very, very happy that this is brought to fruition here, and very excited to work with Francisco and team.
Yeah, I think we're all excited to get down to work with them. Another question for you, Rob. Rob, it's great to see how active you are in supporting the company in market through private placements and through option exercises. It appears that your most recent activity totaled over $450,000 in stock and exercise of options. Can you confirm this is accurate?
I can confirm that I participated in all of the above. I don't have the numbers sitting here right in front of me, but I do believe it is somewhere around there. As I said, I've always been active and participated in as much as I can, and sometimes strategically as well, of course, some of the broader strategy. But no, it's something that we're completely undervalued. And, I said, we're just beginning. And, I know a lot of people roll their eyes when I say that, but we truly are. Where we've seen the market readiness change now, that's the big aha moment, and the excitement in which we have. So I'll continue to support to the best as I can. Obviously, I'm like everyone else that took a beating in all my other investments this year, but happy to channel and funnel in what I can here in sport. I think it obviously brings great confidence to the shareholders. I'm all in here, obviously, and why I'm happy to take these things on head on, and happy to roll the sleeves up and go at her. So,
yeah, absolutely. Okay, next up, we've got a question for Colby. First off, Colby, congratulations on the new role. Can you speak to what intrigued you about Fobi and where you see the biggest upside?
You bet. As you guys get to know me, you'll learn I am a very direct individual. But on this one, let me take a bit of an indirect answer, and let me elaborate a bit on something that Rob actually touched on. So growth in many ways is about timing and matching customer sentiment. There was an Uber before Uber. We just probably have never heard of them. Netflix was not out there pushing video on demand platform out of the gate. They waited until the timing was right for that rapid adoption. Right now, we have ESG initiatives. We have companies focusing on digitizing their offering and bridging brick and mortar with digital commerce. You have CFOs taking a hard look at cost-cutting tools. Again, timing is everything. And all of these points point towards an increasing need and demand for the mobile-first tools that Fobi has been quietly building over the last few years. I think that's something that I'm willing to jump on board and say, this is exciting. Raise my hand and let me be a part of it.
Absolutely. Well, that's great. We've actually got another question for you, Colby. It's actually quite an interesting question. Your previous roles in retail and ad tech are interesting as Fobi has begun moving more heavily into retail with the Barnet and Ideal POS integrations. What does the opportunity actually look like for Fobi in the retail and ad tech space? And is this one of the reasons you came on board?
Yes. The short answer being yes. A brief background on myself. I founded a startup that was a retail technology platform that actually expanded into kind of a multi-touch retail and ad tech platform. And so that was a venture-backed company, again, that I founded, scaled it, and had a successful exit. Went on to spend the following year post-exit integrating my company into the acquirer and really working at the acquirer to lean in and continue to build out and monetize their off-platform ad tech solutions. So I've spent a really good amount of time to the question that you raise in retail and ad tech. And I'm extremely passionate about retail technology and really modernizing the retail experience. For retailers to have success and even survive in many ways, they have to adopt technologies that help them modernize, feel more omni-channel, and allow them to have a better grip on their business data. You hear a lot of people talk about data. It's not just having data, it's actually being able to look at your data and take action upon it. And I'm already seeing how Fobi's technology stack can help retailers with these pain points. In just my first few weeks, I've experienced firsthand, and I've been jumping right in and joining these calls and learning actually from the front lines. And I'm learning firsthand how some of Barnett's liquor retail partners, their eyes are lighting up when we talk about the analytics and learnings that are being unlocked by Fobi's data analytics platform. Then you bridge those learnings into the marketing side with things like our wallet-based loyalty solution that we launched with Scotch and Soda, and the capabilities and powers that we have in creating not just engagement, but meaningful engagement with customers, both in store and then beyond the four walls of a brick and mortar store. It's really exciting, especially as we see a continued trend towards digitizing in-store media activation with things like retail media networks and to the points we've made earlier, digital couponings and what's coming down the pipe there. I think it all roads lead to retail having to modernize, and I think we have the tools to help them.
Absolutely. Great answer. I wish, I'd had some of these tools when I ran global marketing at Epson and had to deal with, a very antiquated retail industry there. So I think you're absolutely bang on with that. And then I guess connected to that a little bit, here's another question about your background, Colby. It says, Colby, your background as an M&A attorney is a great asset to Fobi. And as Rob has already made several acquisitions, are you guys planning more strategic acquisitions and or mergers with other like-minded organizations?
Yes, 100%. I'm a strong proponent of inorganic growth. That has been a core part of every monetization and growth strategy that I have ever built. And my background on the M&A side should allow us to run hard in 2023 at additional accretive M&A opportunities. In the current market climate, there's a lot, and I'm seeing this every day and have both inbound and just broad conversations. There's a lot of distressed sellers of businesses with great technology and strong fundamentals. What we need to do is just be really opportunistic. We need to be strategic in how we approach that aspect of the business, and hopefully my background will allow us to move really quickly when we do come across those right opportunities. But most definitely, we are kicking tires and actively in market looking to grow the business by any means possible.
I would add to that too, if I can, Ian, is that I always look at every opportunity of what we have, what are the holes and gaps, where do we see opportunity in the world pivoting and moving towards, and we always address it as it's a partner, build, or buy. We've now got tremendous offshore capabilities with our local team as well in the background here. We've got a lot of power and a lot of options that now are very, very, very interesting. And when we look at what it looks like today's present landscape, there's a lot of grossly undervalued companies that are struggling to keep afloat and raise cash, which of course puts us in a great position to not only leverage what we've done, but of course leverage the value of the public market and the power of the Fobi shareholder base and value which we bring to the table in a 1 + 1 = 3 scenario. So something that I'm very, very excited about now that Colby's joined Annie and I. This is a bit of a dream team, if I may say.
Absolutely. No, that's great. And then sort of a final question for you, Rob, and then we've got one last question for Colby. But for you, Rob, with the most recent commercial launch of Pulse IR, it appears to be gaining some early traction. Can you give us some insight as to what is the key value proposition?
Well, I think there's a few, and of course, every issuer or private company we're working with now, it's a little different, of course. The biggest fundamental is we automate all of their existing platforms. So connecting, enhancing, as we talk about in our traditional business side of it, automation plays a huge part. That's the big one. I think the data analytics and measurements, understanding, converting an unknown investor to a known, providing that communication channel when we're in these meetings. The biggest thing that the excitement comes from is we plug in a mobile strategy. I think that's one of the key things here. Is everyone, as I said in the videos that Nathan shot a few weeks ago, a lot of this today is glorified email marketing. Here's the world gone mobile and digital, and we're driving that bus, and now we're providing these to issuers. Shareholders have a tremendous insatiable appetite for knowledge and interest, and that's what we look to provide. And I think at the end of it, there's a measurement and attribution and ROI. I think that's one of the biggest things. It's pretty simple, and we deliver on those, and we are seeing tremendous momentum. It's exciting, and it also gives us great opportunity. I get a few questions of this around some of the models. We've got some that pay straight cash. We've got some where there's a hybrid on a shares for service that gets approved by the exchange. So it helps them protect their cash flow. And in cases where I see the opportunity for growth, and especially these depreciated values of which everyone has today, that share asset becomes a very big unknown of what it could bring. I look back early days as to some of the early shares for service agreements that we did that paid off millions of dollars for some of these organizations, right? So it's puts us in a very, very strong position.
It is exciting. Great. Well, we've got one last question for Colby, and I know you've only been here a couple of weeks, but I can definitely vouch that you are very direct in how you approach things, and you've been jumping right in on the front line. So I guess from that perspective, where do you see the biggest opportunities in revenue growth within Fobi?
I'm glad we're ending here because this chapter of Fobi is focused, as Rob and Annie have mentioned, on revenue acceleration. We've laid the groundwork for revenue growth with a number of impressive case studies through early adopters. Now it's just about execution and doubling down focus on the products that continue to show clear product market fit. And as I mentioned, and I want to bring this full circle, as I mentioned at the outset of the call, our near-term monetization strategy will be focused on 3 key components. One is going to be the revenue expansion of our 3 prior acquisitions. The second is new vertical growth in some places where we think that we have a compelling offering, and these early case studies are proving that with the feedback that we've got. And then again, continuing to work diligently on our inorganic strategy as we vet and weigh channel partners, white label partners, and again, those domain experts where we think there's opportunity for some strategic joint ventures in these key verticals. And I think if you take each of those three key components and you advance all of them at the same time, it can really add a level of compounding to the acceleration that we're looking for here for revenue. And I believe all three of these really will bring big opportunities both in this year and beyond.
Great. Well, certainly looking forward to working with you on that together. Well, that's all the time we have for today to answer questions. I want to thank all of the investors and other people who have joined us here today. Also want to thank our panelists, Annie, Colby, Rob. Thank you so much for your time today to take us through all of this. That is the end of today's webinar. Again, just a little plug for those of you that want to continue to get the sort of news first. Please be sure to download the Fobi Investor Experience Wallet Pass, and you can get access to the latest information about Fobi through that. All right. Thank you again for joining today, and we will look forward to engaging with all of you moving forward. Take care.